There are fears that we're entering the early stages of a possible recession that was due to stocks plunging Monday. The Dow Jones fell 2.6 percentage points. Senior business and tech correspondent Jo Ling Kent, our friend and colleague, is here for analysis. Jo Ling, what's the reality of what has happened today on Wall Street?
The reality is today your 401k and a lot of investments took a pretty big hit. What we saw overall is that the Dow was down 2.6%, the S&P 500 down 3%. Overall, though, experts are saying that this is something that was coming in terms of a correction, so to speak. The tech-heavy NASDAQ officially in correction territory as of last Friday due to that jobs report coming in lower than expected. Now, the number of jobs added wasn't actually a bad number, but it missed what Wall Street was expecting. And as a result of that unemployment number ticking up, you saw the bad day on Wall Street on Friday, and then concerns of a possible early stage of recession here in the U.S. over the weekend. That then triggered a major sell-off in Japan, the Nikkei having its worst day, down 12% on Monday, and as a result, that continues to have an effect here on Wall Street for all major indices ending today in the red. But overall, the experts say, Bob, they say do not panic. Hold on. Try not to look too closely at the markets. The idea is if you are investing is to hold on to your investments over the long term, and you will continue to see gains. Now, if you look back at the numbers, too, over the past year, the past 12 months, all major indices are actually up by at least 9%. So even though we're seeing a day that's deep in the red today, and certainly a lot of tumbling across the markets, overall, if you continue to invest in that 401k and you're holding on, you're still going to be in a pretty favorable position, but certainly has a lot of people talking, including on the campaign trail, Bob.
Jo Ling, what are you watching now in the wake of all of this?
Yeah, I think the most important thing right now, and I was just in Washington, and we were at the Federal Reserve meeting last Wednesday. I asked Jerome Powell, the chair of the Fed, what is going to come next? How is he going to handle what's coming down the pike? And the market expectation right now is that the Fed may have acted a little too slowly. Maybe they should have cut interest rates last week, just a few days ago. And the idea now is that the market is pricing in not just a quarter point a cut in terms of rate cuts, but maybe a half a point, which would help a lot of people get back into the housing market when it comes to getting a mortgage that's slightly more affordable than it is now. We also see mortgage rates already coming down a little bit today. So the idea is when you look ahead to mid-September and that Federal Reserve meeting, we do expect a rate cut. That's something that the Fed has been telegraphing to us for a long time, but now that looks maybe that it could be a little bit more certain, Bob.
And just finally here in a minute, Jo Ling, when you were down covering the Fed, talking to the chair, what else were people really putting on his plate? What are they watching in terms of the Federal Reserve and what it could do next?
Well, of course, politics is the name of the game right now. You know that better than anyone else out there. So I asked Fed Chair Powell, look, there's a lot of criticism coming from former President Trump that if you do cut interest rates come September, that it'll be too close to the election, that the Fed should not do this. This is what the former president has said time and time again, especially on Truth Social lately. And what he said is that the Fed does not act in a political manner whatsoever. They do not account for any candidate when it comes to making policy going forward, making those interest rate decisions. So he says they're staying out of politics. They're looking just at the data. And you can bet the data they're looking at is inflation, jobs reports, anything related to the labor market and stabilizing prices. Those remain, according to the Federal Reserve, the core tenets of what they're trying to achieve. So if you were to look at what to expect, a mid-September rate cut of possibly half a point is very much on the table, according to those who are following this day in and day out here in the markets and looking at what the future could hold, Bob.
Great reporting. It's a good point that even if the Fed doesn't see it that way, politics always hovers near monetary and economic policy. Jo Ling Kent, thank you so much for your reporting.